Yeah, hi guys, welcome back once again to my YouTube channel. This is Turner FOREX, and as you can see right now, I am in on a trade right now on gold, right? Yeah. So basically, this trade I'll be swinging this trade actually. I'll be swinging it up to the last higher high on gold. Yeah. Let me go to the 4 hours time frame, guys. So I'll be swinging this trade. Right up to this high, right? But mind you, I will be executing more trade in between, and I will be taking partial profits, moving my stop loss to, partial profits, right? So that is how it is. I trade other pairs also like GBP GBJPY, and EUR USD, right? But right now, I took a trade on gold, and here's the trade. So I'm about to make a trade recap, a trade recap of how I got to, execute this trade, right? So the first thing I did was to go to my 4 hours time frame, right? To check the market structure. So basically, this was my first protected high, right? And protected low, I mean. But market went a little bit in my favor, then it came down. Then I marked this out. I saw a break here. I saw this break right here. Yeah. So I marked it out. Then this is then using a 4 hours time frame, I had to go back to my 15 minutes time frame to check out an order block at that zone. Yeah. As you can see, there's an order block at the zone. I marked the zone all the way from 4 hours time frame right here. Yeah. This is where the markets cause the break of structure, right? This is where the markets cause the break of structure. And as you can see, we have an order block here. A bullish order block right here. Right here. I have a bullish order block right here. So basically, mind you, before I check out if a low or a high is being protected, probably I'm going to see an opportunity to buy there. What I used to look out for on my 15 minutes time frame is if my order block has been swept, has been swept by a low, meaning I have something like this. Market broke this and came back here to retest this, then came back here and broke this again, broke this last low, right? Then went back up. Then went back up, and I will see this as a protected low. Why? Because it has taken out this last low. And it went back up, right? It went back up to break this last high. So that is exactly what the market did here, right? Let me show you. Market is coming all the way down from here, right? This is coming all the way down from here, and it came back down, went back up again, came back down, went back up a little bit, came back down, then broke this last high. So my main focus is that this market has already came back down here, right? And it went back up again, retraced a little bit, and broke this last high, right? So that's my main focus. So basically now marking is out as my protected low, right? Let me extend this other block. And I mark this out as my protected low, right? So the market came into this zone to tap into this zone. I'm making an analysis of this buy, not this sell, right? To tap into this zone, right? And I observe something. The market came into the other block. We have a low, a high, right? A low. And markets went back to break this high immediately. Now notice, this is what I used to notice in the movement of the market. Why? What I used to notice first is momentum and distance. Had it been the way the market rally all the way from this low to this up is, just high and low, high and low, high and low, then down to this top, then I won't be taking this buy, right? But the reason why I took this buy all the way back from here is because of this bullish momentum. That's how I get to know, okay, when a market wants to sell, when a market wants to buy, right? Because of this bullish momentum. That's how I get to know that, right? So basically, the market rally back up here. And I was expecting the market to kind of create a low here, meaning an incomplete pullback, a 50% incomplete pullback, then pull back down to the other block level, right? Then mind you, I just don't execute my trades just like that, blindly. I wait for another structure again, another correction again, probably yeah, another continuation pattern, probably on the 1 minute time frame. So basically, as a regular trader, they are just going to put their entry here and buy from there immediately. But I don't do that, right? I don't do that. This is what a regular trader would do. They'll put their entry by this side, and they'll say they want to buy from here, putting their stop loss below here. But I don't do that. What I mark out is to mark out the other block, then to look for the same pattern. What happened here on the 15-minute time frame, and I'll go to 1 minute to look out for that same pattern here on my 1 minute time frame. So let's go to my 1 minute time frame to confirm that. Yeah, so on my 1 minute time frame, as you can see right here, the same thing happened, right? We have a low, right? High, low, high, low, right? And the market went back up to break this immediately. Now, what did I do? The market going back up to break this immediately. I looked up on my favorite trades and I marked out the nearest other block, which is this to me. I should have marked this out, but I prefer this since it is way more than the 50%, right? So then I put in my entry all the way from here, right? That was how I got in on this trade, and I took the buy all the way from here. So basically, my overall target, I took about 4 positions on this trade, as you can see on the screen right here. I took about 4 positions, right? And I'll be closing 2. That's my TP1. Here's my TP1. Hold on, guys. I'll be closing 2 right here. Though the market has already hit it, but I forgot to set my TP. So I've set my TP again right now. So I'm expecting the market to, just hit my TP and close 2 out of my positions, right? Then in between, then I will leave the remaining 2 positions, to run, to rally up to this last high. This is the last high, the external liquidity. Then I'll leave the market to rally up to the. But by the way, in between all of these movements, right away from here down here, I would be doing what? I would be executing more trades inside. So that is how it is, guys. That was how I was being able to carry the trade all the way from here to here as my TP1. Now I'll be leaving the rest, to just move in profit. And this is about 1 ratio what? 96. Using 30 pips actually. It's about 1 ratio 96. Mind you, this is a swing trade. It's not a day trade. This is a swing trade, right? So let's see how it goes, guys. I'm going to update you guys on how it goes later. Yeah, bye. And please do not forget to like, share, repost, and subscribe to my YouTube channel for more content like this. And if you have any comments on this regarding this, or you want me to explain something better for you, please do well to drop it in the comment section, right? Thank you so much. Bye. Have a nice day.